Hey everybody, Darren and Eric here, coming to you from our office in American Fork
Hi there.
at the base of beautiful Mount Timpanogos. Right out the window here.
Yep.
Looks wonderful today. Anyway, we've got some really cool stuff we want to cover with you today, some amazing opportunities, and hopefully some information that will really help you out and get those wheels turning.
Yeah, I mean, it's a really great opportunity right now in the market. That's why we're reaching out to you. There is a combination of three things right now that can be a huge benefit to most of you.
And we've not really seen this combination in our whole career.
I haven't, for sure.
Long
And we've been doing this a long time, 20 plus years, right?
Yeah.
So right now, you've noticed a lot of this, but home values are at an all-time high. They're way up there, and they've increased over the last couple of years. Mortgage rates are still really close to all-time lows, and as low as they've been. And so you put those two together, that alone is a huge opportunity. Then you add to it a third opportunity right now in the market, and this is recent, but there's a lot of new custom home loan options that are available in the market, which allow you to also potentially save some additional money. So we've got high values, low rates, and custom home options that are huge opportunity. We really can't overstate the opportunity that those are providing right now.
Yeah, but before we jump into how to utilize those opportunities for your best benefit, there's a couple of problems that you might be facing in your life, and we've all been there. We've all been there. Typically, there's life changes that occur that will bring people into debt. Health problems, education, consumer spending, needing a car. It doesn't matter. I mean, the reasons really don't matter. But you might find yourself having debt and just not being able to get out of it. Right?
Keeping up at night.
Yes. Waking you up in the morning, keeping you stressed. In fact, sometimes that can tax relationships pretty heavily. But then you just feel like you're kind of a failure because of the uncertainty that's in your life, because you just can't seem to get those balances down and move ahead, especially when you're middle-aged and you're thinking, man, I should be further ahead in my life.
And you feel like you're the only one.
Right.
Nobody else is having this issue.
Yeah, that's a great point. So,
which is not true.
Right. It's not true at all. So, anyway, those problems can manifest themselves in many different ways, like no money in the bank, or not being able to make the progress that you want financially, not being where you wanted to be. And it just makes you feel kind of crappy sometimes.
It does. But that's kind of what we're all about today. There is an opportunity out there that could be a great solution to that. But there's another thing I should bring up is, even with the opportunity of utilizing your home to potentially solve some of these problems, some people are reluctant.
Yeah.
They're reluctant to use the home. Maybe some misconceptions, maybe some legitimate reasons.
Absolutely.
But maybe spell out, or maybe list a couple of those that people are struggling
with.
Well,
yeah, the thing is what happens is people will look at their home, utilizing their home as kind of a last resort, almost like you're waving the flag of surrender and failing. So I thought I could get ahead, but now I can't. So okay, I'm going to surrender and utilize my house to pay off these debts. But the reason why you feel like a failure is because by utilizing your house to pay off debts, for example, you actually might feel like you're moving backwards, like you're starting all over again.
Yeah, you only had 10 years left on the loan, and now you have a new 30, plus a little bit higher balance, right?
Yeah, that's a great point, like you're robbing Peter to pay Paul. So nobody likes to feel like they're moving backwards. And that also can make you feel like a massive failure, right?
Yes. And there are solutions to that, actually.
Other reasons people are reluctant?
Sometimes they don't want to pay some, they've done their other loan and they're like, I paid some closing costs to get into that, and I do not want to pay more closing costs.
Yeah.
And they have in their mind that the closing costs, or maybe they've seen it, where the closing costs are $5,000 to $10,000.
Yeah. Another valid concern.
Yeah, and a totally valid concern. So there's that reluctancy to pay some additional money.
Yeah, restarting that clock, paying more interest in the long run. All of those reasons are actually totally valid reasons. And if a mortgage isn't set up correctly, then that's exactly what can happen.
Right.
All of those things can happen.
Right.
But we're going to show you a really cool way how to overcome all those problems and changing the perception of using your house as a last resort to actually using your home as an opportunity.
Absolutely. Kind of being deliberate.
Yeah, being deliberate
Thinking
about it.
ahead.
Like a sharp businessman, an expert CEO restructures debt to leverage what the market is giving.
Right on.
Yeah.
And we actually have a system. We call it the debt killer system, and debt killer mortgage system, and it is smart analysis. And there's 4 steps to it. Maybe we should hit those really quick.
Yeah, let's talk about, so with the debt killer mortgage system, it's a way to get your cake and eat it too. It's a way to solve all these problems that you have, but basically raise your loan balance to get what you need, but not start over or fall further behind. It's a great system.
Sometimes you raise your balance, sometimes you don't.
Right.
It depends on your needs. But
Yep.
why don't we hit those steps really quick?
Okay.
So
So-
the first step,
4-step system.
First step is we evaluate your asset or your home. And this comes with a lot of math, a lot of evaluation. We'll even help kind of find out what your home is worth.
Now, real quick, people have probably done a refinance before.
Yeah.
Right? And they call in, whoever they're calling to do the refinance, they're always asked, what do you owe? What's your payment? And what's your rate?
Right.
Pretty foundational stuff, right?
Right.
So it's not just that.
It's not just that. We go into a lot more detail. And that's really the big first step is we need to kind of ask a lot of questions surrounding the home itself, because that's sort of the magic. That's where a lot of things can happen. That's where a lot of opportunities lie, especially today.
And there's some details in the math.
Yeah.
Like there's some extra calculations that we can do, not on just the future mortgage, but on your current, that give us some really detailed information to help know which way to go.
Yeah. So that's step number 1. So we look really carefully at the house and everything surrounding it. Okay. Step number 2.
So step number 2 is consider and prioritize your needs. So that would mean, do you have debts that you want to pay off? Do you have cash that you need? Do you have a combination of all that kind of stuff? Well, how much do you need? And what is the priority of the needs? Mm-hmm. So you might have some debts that you really, really, really need to get paid off, and it would be nice to have a little bit of money for a home improvement. So we look at all that. We consider your debts, your payments, and other cash needs in detail. So step 1, evaluate the assets. Step 2, consider and prioritize your debts. Oh, and the cool thing, by the way, is we actually have a sheet, a way for you to just get started right away.
Oh, yeah.
So
hugely helpful.
We'll tell you how to get that a little later.
Yeah, and that step number 2 is pretty complex. We do a lot of analysis there to help out. So step 3, we want to make sure that you can actually approve for the loan that we do, the loan that we're analyzing for you. So step number 3 is just we go over the typical things like credit analysis, debt versus income analysis, and we're talking new debt versus income analysis if that's changing with the refinance. And we put that all together, how much your house is worth and all the other questions around your house, and we pre-approve you for a traditional mortgage loan. We're talking loans like conventional loans. This is nothing weird, no oddball products like you heard about in the early 2000s. They had those funky loans. This is traditional conventional mortgage loans. Put all that together, get you pre-approved for a loan, a loan. And then step 4.
Step 4 is the most exciting. This is where a client comes in and they just get the most excited about. Steps 1, 2, and 3 are pretty normal, even though there's, in the debt killer mortgage system, there's extra added analysis that's done that's very, very useful. But step number 4 is the magic step, because that is, the magic happens in step number 4. So,
right on.
So here it is. It is using these custom crafted mortgage options on regular conventional mortgage loans. Okay, like Eric said, not new weird funky loans, but often overlooked custom options like custom mortgage repayment terms, custom rate closing cost combinations. All of these different things can be shaped to help you not get further behind. So let me give you just a quick example, a very simple example, and just understand that it can be a little bit more elaborate or it can be custom for your situation. So for example, if someone comes to us and they have a 30-year loan, they've been paying on it for 30 years. Mm-hmm. Well, we will examine at the very least what it looks like to start a new 27-year loan versus a 30-year loan. So that way that 30-year clock is not restarted, but you stay right in step on the schedule that you want. Now, The cool thing is it actually may make sense to go shorter.
Mm-hmm.
So we look at those needs. That's why steps 1 and 2 are so important, because you're looking at what your needs are and what you want, and then those custom options will help alleviate the interest situation and moving behind. And I got a quick example.
Yeah, we got a minute.
Got a quick example of
I'll
how
time
this
it.
works. So we use spreadsheets and numbers and all this kind of blah, 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 blah. They're super boring to you, but they spit out really great information, and it helps us really understand, helps you really understand a very, very good direction for you to go. So here it is. Had a client recently. They owed $200,000 on their house. They were looking to get $30,000 additional to pay off debts. So we ran them through the Debt Killer Mortgage system, step by step. Steps 1, 2, and 3, they were very happy with. Step 4 is where they were ecstatic, because here's how it worked. We ended up getting them, getting them the sweet spot of actually moving it to a 20-year loan. Now, what that sweet spot did was it enabled them to pay off $30,000 in debt, but there was a couple of bonuses. The first bonus was, because of that shorter term and paying the debt, it actually enabled them to get an additional $20,000 to fit inside their budget. That $20,000 they wanted for some home improvements. So they actually raised their loan amount $50,000, but here's the kicker. Because of the custom rate option and because of the custom repayment term that we put on the 20-year, they actually paid, or were on schedule to pay, $18,000 less in new interest on the new loan than they were scheduled to pay on the remaining loan. And that's after they raised their balance by $50,000. Oh, one more bonus. Their monthly budget cash flow dropped by $600 a month because of all the debts they paid off. And we didn't even calculate the amount of interest that they were saving on the debts that they paid.
Compared to the consumer debts, what they would have paid.
Yeah, that's right. So they walked into a much better situation by refinancing, restructuring those debts, and they're actually paying less and paying their loan off sooner.
That's awesome.
It's amazing.
That's a cake and eat it too moment.
That's a cake and eat it too moment, and that's what the Debt Killer Mortgage system is after. It's to help you get your cake and eat it too, to get you what you want without falling behind.
Yeah, I love that.
So,
that's a great example. And actually, we see that frequently.
Yeah. Well, here's the thing. If this sounds like something that would help you out, then we have a lot of options for you to get started. At the very least, download our sheet. There's going to be a link for it. And to get the wheels turning, to start doing steps 1 and 2 on your own. You can reach out to us and to schedule a Debt Killer Mortgage call. That's a free, no obligation call where we're going to walk through those 4 steps.
Right on.
Yep, we're going to walk through those 4 steps. We're going to do the analysis and help you out with all that. And here's the thing. The numbers are going to tell the story.
Mm-hmm.
The numbers tell the story. So we don't try and convince anybody of anything because the math really, really bears it out.
Very true.
So, and truthfully, you may be in a position where refinance doesn't help you.
Right. Oh,
So-
yeah. That happens, for sure.
Yeah.
For sure.
So-
but boy, the opportunity is so strong that it's absolutely worth your time for a few minutes of a call
Yeah.
to see if this can
Absolutely.
help you out.
It's helping this Debt Killer Mortgage system and approach is helping thousands of Utah families, Utah homeowners these days.
Good to chat with you today.
Yep. Hope that helps.
And you too.
Oh, you too. Talk to you soon.
Bye.